Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitinn. Good morning. Happy Friday, Lawrence.
Happy Friday indeed. How are you?
Good. Last night, folks, was the second time I saw Lawrence for the first time
ever,
or for the second time in real life ever. He's real. All right. I still can't get over it. Checking in on
can't
Bitcoin.
Get over meeting me.
Coindesk Bitcoin price XVX index is currently trading at $49,644. Bitcoin slightly up at 0.5%. Lawrence is ever as hilarious as he is on TV, folks. And the Coindesk Ether price ETX index is currently trading at $4,203, retreating about 2.3%. And the DFX, Coindesk's DeFi index, is at 415 points, also sliding down about 5.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. All right, Lawrence, so taking a look at the markets, the slightly up with Bitcoin, a bit of a retreat with our alts. Not much going on.
Rally. There was a rally. No, it was actually a small little rally, temporary, a few $100s, when the CPI number came out. Slightly higher than expected, but we're looking at some crazy numbers there. I mean, these 6-7% year-over-year inflation, which is like, I'm a Gen Xer. We kind of remember that. The music was a lot better then, though. When inflation was last at 6-7. So this caused a spike in Bitcoin because I think people are looking at it and like, oh, wow, inflation, go to Bitcoin. Except at some point they're going to be like, wait, that also means that the Fed might accelerate, tapering, and that could end up hurting Bitcoin. So they're still trying to figure out what's the next move.
Mm-hmm. Well, I'm seeing, a lot of positive spots and silver linings in terms of a lot of folks are just talking about cryptocurrencies. I see that India Prime Minister Modi was saying that social media cryptocurrencies should be used to empower democracy, not undermine it. They're weighing legislation, regulatory policy on crypto in India. They're doing the same in the United States. In fact, next Tuesday, Congress will be hosting a hearing on stablecoins following this week's 5-hour marathon on digital assets and the future of finance. Let's have a look at it with our spotlight guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Right, joining us now to discuss is Denelle Dixon, CEO of the Stellar Development Foundation. Welcome, Denelle. So you had the privilege of participating in this week's hearing in Congress on the future of digital assets. I wonder what were some of your main takeaways?
Thanks for having me here. This is a ton of fun. The first thing is it was awesome that they engaged with us, and it was real engagement across both sides. And they spent a lot of time asking a lot of questions, and they felt like that they were in listening mode, which is exactly where you want them to be. And this was a real shift, and this felt really good. So there was a lot of focus on stablecoins, some focus on understanding just the value and what happens with respect to these transactions, and what are people looking for in the industry. And so I think that what we're seeing is this shift in Congress, this recognition that this is a really important sector that they need to focus on. And so I'm just really excited. My key takeaway is that this is the first of many, and that we have to get prepared for more engagement, more education, more opportunity to really let Congress and other folks in the regulatory environment understand that taking any of this away from their constituents would be a real harm.
Did you get a sense that they had a better idea of what crypto's about? And do you think that if that's the case, do you think that will benefit or hurt the industry? We have Gary Gensler, who taught courses in crypto, now running the SEC, and he's not exactly Mr. Warm and Fuzzy when it comes to crypto.
Yeah, I do think it's important for us to continually engage, and I do think that they come away from it with a better understanding of it. I think that, the conversations that we had on the record in the room, and also conversations that we had off the record outside, provides a lot of really good questions, but also a really good focus on what are we missing here, and why is there all of this negative energy that's focused on crypto and blockchain, and how can we shift that debate? And I really do think that we've shifted it. So it's incumbent upon us. I've said this over and over and over. Industry has an obligation to educate. We did the same thing back in the early days of the web. We can do it better than we did then, but I think it's the same thing to make sure that they understand the technology stack, but more importantly, so that they understand the activity and the use cases that's happening, so that they focus on the activity layer instead of the tech stack. Because if you're constantly, you want Congress and you want regulators to focus on activity, because if they don't, then they focus on technology and try to regulate on each technology, and you don't want that to happen. You want it to be what activity is happening, where are there gaps in the current legislation, where are there gaps in the current regulation, because the truth is a lot of what happens in crypto and blockchain and even in DeFi is covered by a lot of regulators here in the US.
Yeah, overall, Denelle, I got a sense that it was very productive, very exploratory in the hearing. There was a little bit of bad energy, if you might say, from Brad Sherman, maybe a bit from AOC in terms of addressing some real criticisms about, why wasn't Brian Armstrong there? Why did they send their number 2? Why wasn't Tether there at all? And why are the fees on exchanges sometimes quite high? I wonder if you had a chance to talk to Brad Sherman or even AOC, Alicia Ocasio-Cortez, about their skepticism around the crypto space.
I didn't outside of the hearing. I think here's the challenge that we have. You're always going to have folks that have some information, and that information is going to color their understanding of it. And all we can do is continually press and press and press about what is the value here, what is the activity here, and how can we actually, we need to encourage Congress and others to understand that this activity is really not that different than what's actually happening already in the traditional financial infrastructure, other than it's happening in a decentralized manner. And decentralization, as we know from the internet, is not a bad thing. It's a positive thing. It offers lots of opportunity and lots of innovation. And so I think we need to do that more and more and more. And you're always going to have skeptics. My favorite part is trying to turn the skeptics into folks who at least understand and at least believe in it.
So who wasn't there that should have been? Christine just mentioned Brad Sherman. What were there any executives you felt like
Tether and Brian Armstrong?
I mean, whoever it is, was there anybody you think should have been there but didn't show up?
Look, I think that this is the first. I think this is the first in many. I think that they did a really good job. They had the protocol, they had Stellar, they had the exchanges, they had 2 exchanges, they had the stablecoin issuers, 2 of them. So if you think about if you have more than that in terms of the panel, and there are a lot of members on this committee that each have 5 minutes, that hearing would have gone longer than potentially the 5 hours that it did, which was really long. So I think that the representation was there across the board in terms of the different participants in the ecosystem. And I think that's a real positive. There were some elephants in the room. There was a lot of talk about Tether, but I think that what we're focused on is really good activity around what we can do to protect the ability for stablecoins to be issued. And that, I think, is a real win.
You think Ripple should have been there? Craig Wright? Anybody?
I think that, again, having the different individuals in the room that represent the industry participants is a really good thing. There's going to be more, and there's going to be more opportunity for others to be present. As Christine mentioned at the beginning, they're going to have a Senate side hearing, so there's going to be opportunity for others to engage.
So what do you think was their biggest worry overall? I mean, you mentioned it a bit, but if you had to step back and you had to say, okay, this is what I think ultimately is Congress's biggest worry about cryptocurrency and about the blockchain space, what would you say it is?
I think that the biggest takeaway from the concern standpoint is consumer protection. And I think that what they are constantly trying to figure out is there sufficient consumer protection here? I mean, you heard lots of them talk about, is there notice? Is there opportunity for consumers to understand the technology? And I think we need to be able to really separate that out a bit and say consumer protection statutes are applicable to everyone across the board. All of these entities have those obligations to be fair and reasonable with their consumers and to be able to provide notice. I think What we also, so we don't need to like fix that part of it because there's already the opportunity there for that to happen. But what we do need to do is be able to pull that thing, that strip through about literacy. That was the other thing that you heard. Is there enough understanding and knowledge of this ecosystem? And one thing I'd like to say is I don't think everyone needs to understand the underlying technology. We just need these use cases to have really good UX and UI design. And when we start to get to that and we start to pull folks through the use cases with really good UX, UI, and in context notifications, they're going to see a lot more of what they see already today in the web. And I think that that's going to be a lot better for that. So the consumer protection and this literacy piece is the one thing that I think kind of goes across both sides of the aisle.
Correct me if I'm wrong, but I also sensed an undercurrent of, concern regarding, what will these cryptocurrencies do to upend potentially the dollar? And in that case, should they be developing a digital dollar? What would that look like? And I wonder how you may be able to weigh in on those kind of conversations.
Yeah, no, that's absolutely right, Christine. Across the board, there was a discussion around the dollar and protecting the dollar as sort of the currency outside the U.S. and in the U.S. I think that what we were able to do during that hearing, and I think that we could make more inroads here, is to really demonstrate how actually stablecoins that are one-to-one backed and have that consumer protection angle and really focused on giving the value to the consumer, they actually support the growth of the dollar, even outside of the U.S. One of the things that I see constantly in our business, and we have over 20 stablecoins on Stellar network, but with the USD coin, so Circle's coin, when it became available on the network, it was something that companies outside the US really, really wanted to leverage. It's in high demand to have a USD coin that is actually leverageable everywhere in the world. So I think that actually supports the supremacy of the dollar. And I think we did go pretty far in recognizing that all of us care about that and that it's something that's already being supported through these really strong stablecoin providers today.
Do they find, have you heard from any members of Congress any concern about, for instance, algorithmic stablecoins and its potential instability, rather?
Well, I think that there was a tremendous amount of focus on the one-to-one backing, which would be a challenge for algorithmic. So I think that we didn't get into the details of that, but I do think that what we're already seeing in the proposals that have come out, and certainly in some of even the proposals that we support, is that one-to-one backing with the with fiat and with the U.S. dollar, so that there's, at least when you're talking about U.S. dollar currency tokens. So that is an important piece of really creating, again, that trust and that consumer protection. So again, there wasn't a focus on that, but given where the discussion was moving on stablecoins and stablecoin regulation, which who knows if that's going to happen in the short term or the long term, but this is something that they felt more comfortable with respect to the one-to-one backing.
Yeah, from when they asked SBF, Sam Bankman-Fried, CEO of FTX, about his thoughts on stablecoins, he mentioned perhaps there should be more attestations, a lot of independent audits potentially in the future. Is that where you sense the conversation is going towards stablecoins?
Yeah, I think that one of the things, and I think that we already have really, at least the two providers that were there, and there are others that really focus on that public attestation and that auditing. And I think we're going to move to the extent that we see regulation here, it's quite likely going to have some kind of requirement around, I don't know if it's going to be daily, but certainly regular attestations about where the value sits. And I think there's going to be a requirement also that it be sitting in insured depositories, so that there's going to be sort of this relationship with the existing and the traditional banking infrastructure as they hold the assets that back the token.
And do you think a new regulatory agency or a new body needs to be created to address digital currencies? I also heard from Brian Brooks that wasn't necessary. Just deal with the many regulators that are available right now. And if so, which one?
Yeah, so I think it's really hard to create a new body that's focused on this. Again, I like to think about regulation in terms of the activity. What is the activity that you're trying to focus on? And most of this activity, as I said, is already is under these different regulatory agencies today. The way that we've certainly thought about it and talked about it is that we think the OCC could actually stand up and be the agency that regulates the stablecoins. If they actually created legislation around the requirements about what a stablecoin issuer would need to do to be called a stablecoin, that you could put that with the OCC or potentially in collaboration with some state regulatory agency as well. So I think that there's then the activity around what happens with those stablecoins. It could be regulated by other agencies. Once it gets into use in terms of other things. But the underlying coin itself should probably be at the OCC level. I agree with Brian that there should not be another regulator. If we do that, we would have done that for the early days of the web too, right? This new technology was something that there was a lot of fear about way back 20 years ago. And there was this thought, oh, do we need to create another regulatory regime? And we had some restraint we saw some restraint with the government then, and I'd like to see similar restraint today.
Great. Denelle, thank you so much for your insights. Appreciate you coming on the show. That was Stellar Development Foundation CEO Denelle Dixon. Coming up, we'll be checking in on Asia and a crypto markets update as well with VanEck.
Hello, I'm Jordan Muthra, Head of Studio Operations, and you are watching Coindesk TV.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Megha Chatta of Forecast News.
Welcome to the Daily Forecast, December 10th, 2021. I'm Megha Chatta of Forecast News, covering all things blockchain. Well, it's been a tough week for many, with most major cryptocurrencies down. A missing dog report for Shiba Inu has the community on alert. We'll take a look at that and a whole lot more coming right up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, Bitcoin's hash rate has almost fully recovered just 6 months after China's clampdown on the mining sector that resulted in a mass exodus of miners from the country. Despite the recent Bitcoin price crash, according to data from blockchain.com, the total Bitcoin hash rate stood at 180.5 million terahashes per second on Thursday, almost approaching its all-time high of 180.67 million terahashes per second seen back in May. Meanwhile, Hong Kong-based Animoca Brands has announced a joint venture with Australia's Aquis Farm to create equestrian-related metaverse products, games, and NFTs. Aquis will provide intellectual property and equestrian knowledge, while Animoca will develop the products and bring the equestrian world to blockchain. One expert told Forecast News such tie-ups are a part of a wider trend.
Every industry is coming into the NFT space, and not just consumable brands, but also experience brands. So the horse racing industry is like an experience. So that just kind of lends itself well to a digital experience.
You can find those stories and more at Forecast.News. Now on to markets. Within what's been a downtrend for the greater crypto markets, meme coins are having internal struggles of their own. Forecast News' Carolyn Wright reports.
Shiba Inu has fallen around 60% from its all-time high when it fetched a crypto top 10 spot last month before falling back. The meme coin was part of a mega hack at crypto exchange Bitmart, where hackers reportedly stole around $200 million worth of crypto on Ethereum and Binance chain, including more than 893 billion SHIB. That's worth around $31.5 million. The SHIB community offered to assist Bitmart in the recovery, along with crypto exchange Huobi, but so far the dog napper has not been found. For Forecast News, I'm Carolyn Wright.
And prices across the globe are on the rise, and in much of the developing world, where people often don't have a social security system to fall back on, the cost of daily living has reached stratospheric levels. Can blockchain technology be the disintermediator to give people their economic freedom back despite rising inflation numbers? Let's find out the answer from Adrian Brink of Anoma, who joins us once again. Adrian, it's so good to see you.
Glad to be back.
You know, when prices for things like milk, eggs, and gasoline go up, consumers really don't have much choice but to pay the higher prices. How does crypto and blockchain change that?
One of the biggest problems at the moment is that fundamentally a payment system within a country is tied to usually the same or the currency issued by that country. This is certainly true for most of the Western world. The big thing that we are now capable of is experimenting. So people should create more and more currencies because we don't know what the best currencies are, and experimentation is a really, really good way to find out what works and what doesn't.
So if one is no longer tied to a fiat currency, how does one hedge against inflation? Traditionally, one might look at gold as an inflation hedge. What would we look at in the crypto blockchain space?
I think there is honestly an argument to be made that gold is a very poor inflation hedge. The best inflation hedges are most likely baskets of assets that combine different currencies in them. So that you have a little bit of gold, a little bit of Bitcoin, a little bit of ETH, a little bit of other currencies, maybe a little bit of tokenized real estate. But the big thing is this wasn't possible. We couldn't create new currencies in the past.
Adrian Brink of Anoma, thanks so much for joining us today. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XVX index is trading at $49,579. Bitcoin slightly up about 0.9%. The CoinDesk Ether price ETX index is trading at $4,186. ETH taking a bit of a breather, pulling back about 2.7% over the past 24 hours. And the DFX, CoinDesk's DeFi index, also retreating about 5.3% at 416 points. Joining us to discuss the crypto markets is Matthew Sigel, head of digital assets research at ETF and mutual fund manager VanEck. Hello there, Matthew. So perhaps you could weigh in on these, what I would call lackluster crypto markets. December, we usually see a rally. Is that still possible?
Well, it's totally possible. I think what we're seeing here is a digestion of some parabolic gains over the last, I guess, year to date. And I mean, from my experience and perspective, I've had 24 conversations in the last couple of weeks with pension funds, endowments, insurance companies, foundations. There is an obvious and growing desire among these institutional players to make new allocations to crypto, increase existing allocations to crypto. And there's a lot of work being done on the relationship between inflation and Bitcoin and other cryptographic assets. So, we still feel optimistic here and feel there's a wall of money that will meet lower prices.
So along those lines, you mentioned inflation. And do you think that some of that narrative might change over from Bitcoin to Ether because, well, look, if the Fed starts getting more aggressive when it comes to inflation, that these investors will start to look at the technology. So are they going to then switch, or you're going to see more flows go into ETH and some of the other layer ones, or maybe some of the other layer ones even more so than before?
Perhaps. My conversations with investors find a very split view on this topic. Some are clearly interested in Bitcoin only as a replacement for gold, and then there's other institutional investors that have a more flexible view. But the overarching theme is that investors are craving monetary policies that are rules-based and set by code and formulas, and not set by the whims of a handful of central bankers who have found reason after reason to remain dovish and lower for longer. So we see, 10,000 digital assets, each with their own monetary policy, a handful with the credibility to attract long-term large flows. Certainly Bitcoin and Ethereum are two of those.
Mm-hmm. We see that VanEck is launching a new crypto mining ETF. Congratulations. Maybe you can go a bit about, as we see miners are getting crushed right now, who do you see investing in a crypto mining ETF?
Yeah, we do have some filings in place for some new indices, Bitcoin miners, combining gold and Bitcoin into a store of value index. We have an existing ETF, DAPP, which is heavily comprised of Bitcoin miners. And it's been really interesting to watch the price action and the fundamentals of those constituents. They've derated materially. So Bitcoin miners that were selling, above 50 times sales in April, now it's not unusual to find them at 2 to 5 times sales. Overall, the PE ratio of that index is about 24 times, which is in line with the S&P 500 despite much higher growth. And last time we were at 50K Bitcoin, that PE was in the high 40s. So Bitcoin miners are looking very cheap versus the price of Bitcoin right now. There's been a lot of capital formation in this space, and we think investors are going to enjoy the additional indices and products that we can bring to give direct exposure to this growing sector of the market.
Yeah, within the miner ETF, how are you allocating How are you allocating your trades? Basically, where are you buying and where are you selling, or where are you buying rather, and how are you splitting it up? Geographic? What's the breakdown or type of miner?
Our challenge at VanEck is to create, intelligent solutions that institutional investors can use to access the sector. So there's an investability component, liquidity, a certain amount of liquidity that has to be there. But we're taking a essentially market cap based approach with a pure play lens. So, to be inside of the DAP ETF, for example, a firm has to have more than 50% of their earnings and revenues from crypto. So that's a pure play lens that we take that's differentiated versus the competition. A growing number of firms have been meeting that parameter. So we're getting a wider universe of stocks to choose from. So that's good for diversification. But overall, it's a market cap weighted approach.
Right.
Just you were talking about the parabolic growth we've been seeing in the crypto markets and taking a step back from that. So what kind of opportunities would you see as, best for right now in terms of, would it be Bitcoin? Would it be DeFi? Would it be other altcoins?
Well, this is the time of year, end of year and beginning of year, that we often see some pretty violent mean reversion in the markets. So we think that's something to keep an eye on. 2021 was the year of smart contracts and layer 1 protocols. And we've seen this huge divergence in performance between DeFi. And, some of the valuation dispersion that I noted in Bitcoin miners kind of applies to kind of smart contracts versus DeFi as well. You've got these layer 1s at 100 times revenues or more. DeFi protocols you can find at sometimes 1 to 5 times revenues. So the headwinds for DeFi are pretty well known. I think we got a little bit of regulatory clarity this week that policymakers are engaged and getting educated. And so with this level of valuation dispersion, I think we can expect more activism, more event-driven catalysts like we're seeing at SushiSwap right now, and that may unlock some value and catalyze this mean reversion. It remains to be seen if that's a long-term trend or just a short-term.
Interesting. And finally, before we wrap, do you have any price predictions for Bitcoin at the end of the first quarter 2022?
Bitcoin will be higher, I would say, by at least 10%.
All right, excellent. Matthew, great to have you on the show. I like your hat. That was VanEck, Head of Digital Assets Research, Matthew Sigel. Coming up, Senator Cynthia Lummis' fight for crypto-friendly legislation in Congress as part of our CoinDesk Most Influential series.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching. And you are watching.
And you're watching Coindesk TV.
Welcome back. In our continuing CoinDesk Most Influential of 2021 series, CoinDesk Global Policy and Regulation Managing Editor Nick Day spoke to one of our winners, Wyoming Senator Cynthia Lummis, and spoke about the consequences of the recently passed $1 trillion infrastructure bill to $1 trillion infrastructure bill to the crypto industry, renewed efforts to limit those consequences, as well as her goals for 2022. Have a listen.
The challenges still exist to educate members of Congress about digital assets. But the need for some statutory frameworks is growing stronger every day because the advancements in the technology is outstripping the Congress's ability to really understand and embrace this subject. So we are working, we being Senator Kyrsten Sinema of Arizona and I, as the co-founders of the Financial Innovation Caucus, are working with other members on a comprehensive bill that we will be rolling out. We anticipate that you will see it before the end of this calendar year in total, because we want to put it out as one big draft, file it, so we can start getting input and feedback from people in the industry, the regulated community, as well as the regulatory community. And we then will probably in 2022 break the bill up into 5 or 6 rational pieces that can stand alone, and then move it forward with different bipartisan co-sponsorship with the goal of engaging many more members of the U.S. Senate in this topic. And there are a number of senators who are interested in certain components of the bill, say the banking component or the consumer protection component, the anti-crime component. The definitions are very important because they will help determine which regulatory agency will be the primary driver of a certain subject, such as the SEC or the Commodity Futures Trading Commission. So it's a very comprehensive bill. We're meeting daily with other members to try to take them through it in a broad brush. And for those who want to take a deeper dive, we're able to do that. But you will see a major piece of legislation in the next days and weeks.
So I want to unpack all of that, really. You started by mentioning the education component, and we've seen lawmakers, as recently as last week, put out letters to crypto companies and members of the industry asking for a clarification around their operations and stablecoins in particular, how those are issued and transacted with. In terms of what you've seen over the past year, what's your impression of the kind of level of education that we're seeing in terms of how lawmakers understand crypto, and what do you want to see, or what do you think might be able to happen over the next year or so in terms of this education?
Well, we saw the president's working group report, some of which we've incorporated into this piece of legislation. In fact, most of it, with regard to stablecoins. And we will continue to educate. As a caucus, we are meeting regularly and bringing in speakers to educate people about a variety of topics. These are occurring mostly at the staff level, but there are some discussions also among senators. And then we're going to start a series of dinners in January, where we can just have both bipartisan, and in some cases, if people want to have more partisan discussions, we can. But the delight of this topic is it's very, very bipartisan or nonpartisan. And so we want to make sure people understand this asset class and how it's important now to begin to incorporate this asset class into people's ability to have them in their 401k or other retirement savings accounts.
Since you began your term in the Senate, crypto's had a pretty big moment. Especially over the last year, it's really grown a lot in both attention and in value across the different cryptocurrencies. Has your view of crypto changed at all or evolved at all in that time? Has anything happened, whether it's the evolution of NFTs into what they are today, or any of the other recent events, changed or shaped your view of this industry, or is it just more validation of what you came in with?
I think that my view of the utility of this industry has expanded a lot. When I first came, I was definitely a Bitcoin hodler. I just buy and hold, and I still do. That is my personal choice and investment strategy with regard to Bitcoin. But I have come to appreciate the opportunities that are created by the Lightning Network, which I knew nothing about when I was sworn in last January, and stable coins. One of the things that I found is that I'm a little more skeptical about the notion of a central bank digital currency than I was when I first came in. And so I'll be looking at that issue more carefully in 2022.
That was Senator Cynthia Lummis speaking to CoinDesk's Nick Day. Check out Coindesk.com for the full interview, plus the profile and complete list of the most influential 2021 winners, including honorable mentions. All right, time now to check in with Crypto Twitter for our tweet of the day. This one from VC Jason Choi. Tweeting, I'm astounded by how many funds and founders lauded as heroes by Twitter in 2017 are now closed down, liquidated, or irrelevant. The space tests resilience, caution, and restraint when others lose their wits. All you need to do is win to survive. Every cycle, a new guard. All right. That's it for First Mover. Thank you, Lawrence Luton. As always, have a great weekend. I'm your host, Christine Lee. I'll be back live again at 3 p.m. for All About Bitcoin. Coming up at noon. It's The Hash. You're watching CoinDesk TV.